Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. As I do each and every week, I left my lines on the chart so you can see how the forecast worked out. And if you recall from last Friday, I left this line in place from the previous week, saying that I believe that target would be hit, and I put this target down here at 346.52 as our support level. And as you can see, as of yesterday, the 19th, we hit that precisely, bounced off of this support level, and now it looks like the CCI down below here is starting to turn up. Now, I do believe next week we'll see a little bit of a bounce. We might even see some closing action over the 20-period moving average, which is that blue line. But I do not think we're going to set a new high. In fact, I think we're going to fall short of that, and then I think you're going to see a pivot point lower. So while we could see a retracement back to the highs on Wednesday, I would say to keep all eyes on the CCI down below. Because if we do, in fact, rally up here, you're going to watch the volume to see if it's increasing or decreasing. So this, again, is going to be my short-term resistance target. And then we have to see whether or not this support level holds. So I'm going to erase that line now that we hit that target. More or less what's happening here is with this resistance up above and this support holding, we're more or less in a trading range. So we might see a little bit of this action like that. So for the option traders, this is a field day, especially those who trade the spreads and you're collecting that time premium. And we are having a very good time in the option markets. Our option traders, we had a call with them on Monday, and we rolled all of our positions, took in some cash this week, and all looks good on the option side. So let's go to the VIX, ticker symbol VIX. I kept my lines in place, and I have them in place. I kept them, and this is my long-term target for the VIX, by the way, up there around 27.31. Look at the spike we had in the VIX, right to this resistance point right here. See that? We came right to that resistance from the mid-July highs, pulled back, and now I think we could see a little bit more downside on the VIX, but then I think we're going to hit some support and start to get back on track for the higher levels. Now, for those of you that participate in the cocktail hour on Fridays, interesting thing I pointed out to the members there is that back here in early in the month, we had a gap form. And last Friday, I put my neck out and I said there was a 100% chance the VIX would rally from that low, because that's usually what happens when gaps are filled. We get a reverse. And Monday, Tuesday, and Wednesday, we just stormed right up. And a lot of people made money trading the short-term VIX calls there. But what I'd like to point your attention to here, and making sure everyone is very much aware, is that we still have a gap below the market down here on the VIX. So Monday, Tuesday, maybe even into Wednesday, we might see that gap fill. But once we see that pivot point, then I think we're going to see another rally in the VIX, which could put pressure on the overall market. So I'm keeping this long-term target on the VIX up here around 27. I'm not moving that, and it's going to be very interesting to see how that plays out. So that's for the VIX. Now, of course, for the most part, the VIX is inversely related to the S&P. I'm keeping my long-term targets down here because there's a gap way down below the market. And we're at that point where we're approaching what I call the kiss of death. And that's when the trend line, or even in this case, the moving average, was broken. We're going to have to see if that moving average holds. If next week we get another breach of that moving average to the downside, watch out below, because the sellers will start to put some pressure on the market as we look for the possibility of a correction, or worse, as I often use the word crash. I think that could happen, and I'm going to get to that in a moment. So again, I'm keeping my targets way down below here. You can see a drop in volume on the way up today. Not a big significant event. We might go up and test the highs next week, but again, keeping that long-term target at the gap fill way down here at around 410. So that's for SPY. If we look at IWM, came very, very close. For weeks now, I've been talking about a possible close below 210. Yesterday, we came right down to, look at that low right there, was actually at 210.68. We did not close below 210, but we continue to flirt with that level as a key support level. Now, again, the instructions are for our option traders, if we get a close below 210, we're making the transition to get out of our long positive delta positions, and we're going to be scaling and moving into negative delta or bearish positions, again, on a close below 210. For those of you that were paying attention back on May 21st, right back here, I officially called the top. I didn't call a high, I called the top, and I said it'll take about 3 months for that top to complete. And look what's happening right here. Guess what date tomorrow is? It's going to be August 21st, which is the 3-month mark from that original call right there. I'd rather be early than late on any of the calls that I make. But again, if we close below that 210 level, that is the beginning of the end of that topping pattern, and it could be the new beginning for what I believe is going to be the most incredible bear market we've had in decades. So again, I'm keeping that line in place. Longer term price target on IWM is going to be right down there at 185.89. Again, only time will tell. We still have a lot of time left, actually. That's out there into September. And with the geopolitical events that are heating up, particularly in Afghanistan and in China, with the shipping lanes being closed right now because of the ports due to the Delta variant, which I've mentioned many times. I'm not wishing that on anyone, but it's something you need to pay attention to. We have to really be careful on how that's going to affect our supply chain. So that's on IWM. If we look at the Qs, ticker symbol QQQ, more or less the tech sector, we came down, pulled back, closed below the moving averages on Tuesday, Wednesday, and Thursday. Did a little pop here, but look at that volume. Not a big volume increase on the way up. So that's going to be interesting to see if we get a new high next week. But again, my longer term target for Qs are down here at 349. I'm just keeping that horizontal line in place until we hit it. We're more or less forming this sideways trading range, and you could almost feel how the buyers are pulling back. They are still buying on the dips, but I think there's more people now selling into the rallies. So we got that balance in pressure between the buyers buying on the dips, sellers selling on the rallies, and so that's what causes price ranges or trading channels. And again, this key support level here, the short-term support level from yesterday's low right there around 359 is going to be something to keep an eye on, because if we break out below that low, then the next test is going to be down here at this low right around 352. So that is for the Qs. Now I'm doing something a little bit different. Never before have I talked about Ethereum. I'm looking at the Grayscale Ethereum Trust here, mainly because there's such an interest now in the Bitcoin market. I'm not going to do this on a regular basis, but maybe just on a one-off. I've been dabbling in the Ethereum market here. I took a profit today on a bounce. I got in on a bounce. I bought some down on a bounce on Ethereum. It gapped up, and now we're at a resistance level. We might get a little bit of a breakout there on that resistance. So for those of you that are trading Bitcoin, trading crypto, this could be very interesting, because what this looks like, if it does break out, this could be a cup and handle breakout, and we could see higher levels. Now, I'm not going to regret taking my profits today, because remember, you can't lose money taking profits. But if we get a significant breakout over this resistance, I may even consider getting back in on the long side. And even then, I would scale into the position. I'm not going, both feet jumping into the pool here, but I am dabbling with a scaled position, both in and out. So one last thing I want to leave you with, if you're following me on Twitter, keep a very close eye on what's happening in China. As all eyes are on Afghanistan right now, don't let that be a distraction on what's happening off the coast of Taiwan. China is holding assault drills with aircraft carriers in full force. And my forecast, I don't want to get too much into geopolitical forecasting, but this is an open invitation for China to walk right into Taiwan. If that happens, not quite sure how that's going to affect the markets, but I can't believe that's going to give investors more confidence to the upside. So keep your eyes on China, keep your eye on the global events that are happening around the world, because that will most likely start a domino effect that could bring us to the lower prices more sooner than later. So that's it for me. Have a great weekend, and we'll talk to you next week. So long.